This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
Hey everybody, another episode of Real Estate Investing 365. Today I got a cool guest here. His name is Chase Keller. He's from Des Moines, Iowa. He is a full-time real estate investor, apartment syndicator, owner of Keller Investments, and commercial broker, I guess, right, Chase?
Yeah. Yep.
Okay. Well, thanks for being here, Chase. Why don't we get started? And you can go ahead and tell us just a little bit about your history, where you come from. You're in Iowa, but I don't think you always were in Des Moines, the big city, right? So kind of give us a little background.
Yeah, so I grew up in Cedar Falls, a couple hours away from here. I have kind of a unique story. So I got started, and I lovingly say that my dad forced me into real estate. He always had a few rental properties as I was growing up. So I kind of grew up helping him do the renovations and maintenance and some of the management. When I was 16 years old, he took all my paper out money and told me, today, on your birthday, you're going to quit your paper out and we're going to go find you your own rental property. So we did. We quit the paper out. We went out shopping and eventually we found a tiny little, really crappy little 2-bedroom house.
Yeah.
And I spent that summer fixing it up. We stuck a tenant in there. I owned it for about a year. And then we sold that one and I bought another even crappier little 2-bedroom house. Spent another couple of months fixing that one up, did the same thing. And then by that time I was just graduating from high school. So we sold that and I bought just a big house, big 4-bedroom house. And I lived in that with a few roommates. So kind of did the house hacking thing from the very beginning. Before I went to college, I flipped with a buddy of mine, flipped 3 houses and then basically sold everything off. I went to college in Florida and was completely out of it, but my mind was still very much in real estate. I went into the film industry, so completely different. Eventually when I graduated, moved to New York, lived there for a while. Absolutely loved the industry I was in, but eventually moved back to Iowa to start raising my family. And knowing I couldn't be in film in Iowa, at least the kind of film that I wanted to do, jumped back into the only thing that I really knew and loved, and that was real estate. And immediately jumped in with the little bit of savings that I acquired while living in New York and bought a group of 10 units, spent the summer fixing those up, got tenants in there, and then refinanced and continue just very slowly, but started the snowball buying more and more property.
Okay. So when you were in high school, when you were 16 years old and you bought your first property, I guess your dad, for one, he must have been was he an agent or was he just an investor? Did he flip houses on his own or how did he know to tell you to do this?
Yeah, he never flipped, but that was right around the time or just shortly after Rich Dad, Poor Dad was released. So I was also forced to read that every year. And I'll admit, it was over my head for at least the first 2 or 3 times that I read it before it really started sinking in. But yeah, he always had a few houses and he had started back, I think before I was even born, just always had 2, 3, 4, 5 houses at a time and just fixed them up, had tenants in there, selling them off, just kind of slowly moving upwards. And he definitely understood the value of it. And whether I liked it or not, forced it upon me.
Yeah.
I say that lovingly because now obviously I really enjoy and took over from him and just blew up what he was doing. So
yeah, no, definitely. I mean, it's definitely at the time you're like, you'd rather go out and I'm sure spend time with your buddies or do whatever, but you're working on this house. But now hindsight, it's like, man, what a gift that he gave you, right? Because you're in this whole world and you made your whole life of it. So that's pretty cool.
The only thing I wish there is that I wish I would have fully understood what he was trying to do, and I would have leveraged that more than what I did.
Yeah. Well, I mean, you did pretty good. I mean, you had several houses before you were even, 18, 19 years old and went to college and everything. So it worked out. And then when you came back from college, you bought a 10 unit portfolio, or was it one building? What was that?
No, it was three different buildings, three different locations, but 10 units total. So two threeplexes and a fourplex. And they were in really, really rough shape. And I came home with $35,000. So I kind of knew right away that I wouldn't be able to do a lot with it. But luckily, I found this guy. He had just had back surgery. The properties were in horrible shape. Only 4 out of the 10 were even habitable, and I think that's being a little gracious. Um, so I was able to do um, a lease option from him. I didn't put any money down, but I was also throwing every dime of my $35,000 into fixing up these properties. So he was in a pretty good position that if I didn't perform, he would be getting the properties back
Oh,
in
okay.
better shape than when I bought them. I had a 2-year time period, and about a year and a half, I had them in a position where they were all rented and starting to get seasoned. So I was able to get some decent financing at that point.
Okay. What year was this that this happened?
2010.
Oh, okay. That's a good time, really. I mean, it worked
Yeah.
out. And how did you find those properties? Did you know the guy because it was in your small town that you grew up in, or?
It was actually an acquaintance of my dad, um, that somehow it got referred to him because people sort of knew my dad as I wouldn't say a small time investor, but never owned a ton of property. But it got referred to him. It wasn't anything. He worked a full time job, so it wasn't anything that he was interested. But he knew I was very, very hungry and could potentially be a product for me. So
Yeah,
I
no, that's cool.
jumped in, offered the lease option. It worked for him, and we moved forward.
And
Eventually, he made some decent money off of it.
yeah, did you bring up the lease option idea, or did he was that his idea?
No, it was my idea. It was a little bit difficult. Um, I've always done a decent amount of research, and I knew I had to be creative because I couldn't do a whole lot with the money that I had and essentially no job at that moment. So I had to be creative, and I had to essentially teach him and our attorneys what the lease option was and sort of some of the legal background and uh, diving into some articles and some case law, and really had to educate everybody around me. Even my own attorney didn't really know that much about lease options and how it was going to work for this type of property. So it was definitely on me to make it happen.
Right. And I assume that would be kind of difficult too, right? Like how did that so you just did the research and then you came to him and said, "Listen, I got this idea and this is what I want to do." And he's like, "Get out of here, kid. I don't really you know what I mean? That sounds crazy." But you know, how did it go? It obviously went well, but was it like pulling teeth trying to get the attorney and the seller to understand and go along with this, or once you kind of explained it, they were kind of on board right away?
It definitely took, it was a little bit difficult. And the main part was I had to sell the seller, at least on the possibility of it or the idea. He wanted obviously, his attorney's go ahead or his green light, which then I mean I had to sell my attorney on being able to sell his attorney. So it took a bit of back and forth, and especially because I was putting down no money. I didn't give him a dime to start with, so that by itself was a little bit concerning. But just put together a little presentation on how I sort of knew what I'm doing, even though I hadn't done it for anything in real estate for years at this point. That I knew what I was doing. I ran all the numbers. I even did, full budget numbers for the renovations, did rent comps, just sort of put everything together on how I was going to do it. And apparently it gave him enough confidence to move on it.
Cool. So then that took you a couple months, or you said you had 2 years to end up fixing the property and then refinancing it, or end up selling it. What did you end up doing?
Yeah, so I just put new financing on it. Essentially, it's called a refinance, I guess. Um, but yeah, I purchased it, and luckily because I got it at a decent enough price, got tenants in there as quickly as I could, got them into relatively decent shape. I still had a lot of like the deferred maintenance work to do long term on a lot of the bigger items, but got the tenants in there. And I had enough equity to completely pay him off to purchase with cash another house and the cash to be able to fix up that house. So I did a cash out refinance with enough to buy another property and completely fix that one up, which is perfect because if I wasn't able to do that, I was really in a holding pattern until I saved enough cash flow or other income to buy the next property. But I was able to immediately jump in, buy the next property, fix that up. Once I got a tenant in there, I put financing on that, and that went to the next house and then the next house, and it was really just able to snowball from there.
Right. Yeah. No, that's awesome because especially it would have been hard too because you didn't really have a job, right? This was your full-time job. You lived very frugally and you were just working on
Yes.
these properties and it probably would have been hard to get a loan unless you did another owner financing deal to buy the second property. But luckily you had enough cash out that you could buy the property and do all the right. You paid cash for the next property. Is that right? You paid cash for the next property and
Yeah,
then,
yeah. And yeah, so once I did have a job for a little bit, and that was only for the lender and their requirements. So once it was really, I didn't have much to do. Once I got the properties fixed up and got tenants in there, as you know, there's not really much to do. So I did go out and get a job. I was a glorified telemarketer, knowing that I was only going to work long enough till the bank said, okay, you have income. And I even told the bank, I said, I'm working towards getting this lease option paid off. Once I purchase this, I'm going to quit my job. So run your underwriting knowing that once all of this is done, I'm going to quit my job. So I worked for, I think it was 11 months, 10 or 11 months, and worked that. And then once all the loan came through and everything was done, I was able to quit my job. And that's when I bought that next house. Immediately jumped in and worked on that. I had just enough cash flow to be able to sustain myself, to be able to live and continue throwing money into a pool to buy more property down the road. So not necessarily something I would recommend for everybody.
yeah.
I did for 6 years. I lived off of an income of about $1,500 a month. So not something I would recommend to everybody, but it's a way that I was able to get in, live very frugally, and just be able to snowball and buy more property. So
Yeah.
I'm
That's
pretty lucky.
awesome. And then you ended up growing that. I think you said you got up to like 70, is that right? 70 kind of residential rental properties or
Yeah.
units.
Yeah, about 70, 75 units total until I was ready to start buying multifamily.
Okay. And so were all these units, these 75 residential units that you had, these are all like in different little small towns throughout Iowa or centered around your hometown, or where were they
Yeah, yeah. So
located?
they were all within, Waterloo, Cedar Falls, and within an hour away. So several little small towns all around an hour radius of where I lived.
Okay. And so you kind of scaled rather quickly. I mean, really like getting up to like 75 units in what, 3 or 4 years. And then you kind of went into the apartment investing route. So kind of tell me about that. Like, what was your first purchase in the apartment world, the bigger commercial stuff? And then where was that purchase at?
Yeah, so I knew as I was getting into the apartments and knowing I wanted to do the large multifamily, I sort of did um, I took a step back and took a month off of doing pretty much anything other than just market research and analyzing a group. Think I started with 10 or 11 different markets, all within 4 or 5 hours of where I lived because I like the Midwest and family and everything is very rooted there. Um, so I started with there, quickly narrowed it down to I think 7, and I just did a really deep dive analysis into all of these markets, and everything was pointing to Des Moines. So immediately decided I'm going to drop everything. I'm not going to buy anything in any market other than Des Moines right now. I'm going to start playing this out. We decided to move our family down there, and eventually everything was going to be moved down there. So the first property was just a 9-plex in Des Moines. It was kind of my starter project. It's one that I still own today. And that was the first one. Jumped into a 24-plex, did syndication. And that's kind of where it all started, is as I started to buy these larger properties, I had the option of I can refinance all the property that I hold, pull out a little bit of that equity, and use that for the down payment on the multifamily. I could sell off everything that I have and have a little bit extra to throw in. Or, and this is when I found out about the idea of syndication, where you pool money from other guys and be able to buy a larger property, something that I wouldn't be able to do myself, sort of diversify the risk among a lot of different guys, a lot of different pools of money, and be able to buy something larger. So
Okay.
spent a lot of time diving into that, learning that world, joined an amazing mentorship program to be able to learn that. And I jumped in and I did it.
So yeah, so let's step back a little bit. When you decided to take the month off and you decided to look at a bunch of different markets, for one, how did you know what data to look for, and what, like if somebody was new to it, how would they even know what to look for? They just look at a general radius of their area that they live in, and then what data sets would they look at to determine a good market to invest in?
That's a great question. So the whole idea of how do I even look at a market? So a few years before that, anybody who knows who the real estate guys are, they did in the past, did what they call field trips, so market field trips. So jumping into a market that you don't know, and how do you analyze the area, analyze the jobs, the rent growth, the appreciation, even building the team. So how do you find property managers, good accountants, good insurance agents, that whole world, and there's so much to it. That's kind of where I started, is taking that little bit of experience that I had from them, and a lot of research on even like bigger pockets. So finding out, what are other people saying on how they study a new market. And it was a little bit difficult, especially because not every market, so bestplaces.com is one of them that has like some information on the markets. It has a lot of information for some markets, but not a lot of information for other markets. So it's really just pooling from a bunch of different websites, articles, studies, and pulling it all together. And I had this one master spreadsheet that had like every possible way that I could analyze a market, even down to like how many property managers can I find in this market that manage over 200 units. So just kind of taking as much information and pulling it all together and being able to compare one market to the next. And like I said, there are some of those factors, and whether it's just the population growth or the appreciation levels, that were better in other markets. But overall, everything very, very strongly pointed to Des Moines out of the markets that I was studying.
Okay. So this was probably just a couple years ago. What year was this that you started to jump into this multifamily or bigger stuff?
This would have been 2016.
Okay.
So yeah, almost 4 years ago now.
All right. So you bought the 9 unit, then you bought the 24 unit, and then you figured, hey, if I'm going to keep scaling this and growing bigger, like I'm going to run out of my own money soon. I'm
Yes.
going to need to get into like start a syndication company, and you got a mentorship through that. What was the who was the mentorship with? It was somebody you knew, or was it like a kind of a influencer type person that has a platform out there already?
Yeah, so it was definitely an influencer. So I went with So I had been following the real estate guys, Robert Helms and Russ Gray, for years now. Even I remember riding the subways in New York, listening to their podcasts as it first came out. So I'd followed them for years. I'd gone to several of their events. Really, really appreciated what they do. So, and they have a really strongly recommended mentorship group for syndication. There's a lot of other ones that I had, and even ones that they personally recommended me to check out as opposed to themselves, which I love that idea of they're not too proud to recommend other good people.
Mm-hmm.
So just looked at a bunch of them, talked to a few of the guys that run those programs, and decided that was the program that I got into. And I was in for a year. It's really expensive, and it takes a lot of time and effort to be a part of that group. And I think all of them, there again, you get what you put into it, right? So
Yeah.
there's a lot that can be gained, and I loved it. The connections that I made there, the friendships that I have, and the people that I can even now, I mean, well into where I'm at, any questions that I have, I can easily go to people that were in that group and ask questions and bounce ideas off of.
Okay. So in the real estate radio guys mentorship, were you working directly with them themselves, or did they kind of run it to where, I know like, what's his name? That has the apartment syndication.
Brad Sumrock.
A couple of them have like teams, like where they have like they have
Yeah.
coaches, and you work with the coaches, but you don't work directly with the actual mentor. You work directly with the real estate radio guys.
Yes. Yeah. So they keep their program very small. When I joined, I think there was 12 of us, and they maxed it out at 20, but I think the most that there was ever in the group was 16. So it's a very small group. We're on a call every week. We meet once a quarter. So it's it's pretty demanding. It's intense, but yes, you're dealing directly with them. There are a team of advisors that they have, but almost I had their own cell phone. So if I had anything, I could text them a question. I could email them a question and get a response directly from them.
Right. And if you wouldn't mind sharing, how much was it, or do they put that out there? Is it a monthly fee or one lump sum fee, or?
No, it is. So it's 25,000 every year.
Okay.
Definitely not cheap by any means, but
But
well worth the cost.
right, 25 grand. I mean, people spend way more than that going to college, and then they get out. Like people always say, and get this $30,000 a year job, and they spend 80 grand on school. And it's like, well, this is something, if you're really into it, 25 grand, it's like you could make that in a freaking day on a good apartment deal.
Yeah. Yep, exactly.
Okay, cool. So you did the program. Now, while you're going through the program for a year, did it take a year of planning before you got your first deal, or that year consisted of, you bought your first deal and raised your first set of money and everything in that first year of training? How did that go?
Yeah. So I think we definitely started the process within that first year, and I think we closed the first big property right after that first year had ended. And I stayed with them for a little bit longer, but I didn't. That was enough. That's kind of how they run the program. It's not an indefinite thing. So,
Right.
yeah, just as that year was ending is when we closed on this one property, and everything worked out, and wonderfully, because it was a very long, drawn out closing process and getting everything started.
Okay. So what was that first deal that you ended up getting?
That was my 52 unit complex here in Des Moines.
Okay. How did you end up finding that property?
So I did a good amount of wholesaling before I jumped into the Des Moines market. And there again, that was also to essentially just raise capital to be able to buy apartment complexes. So I kind of used the mindset of marketing to distressed home sellers, and I used it. It changed, obviously, the verbiage, changed the medium that I was going into, but That was a property that I contacted the seller myself and got into a conversation with him and eventually went out and bought it. So it wasn't anything that was on the market. Um, and there again, that's where most of the decent deals, especially right now in the market condition we're in right now, the best deals are typically off market. And I know one of the things that I'm really good at is finding good deals and being able to underwrite and know what a good deal is and what some of the potential for a property is. That's one of the major skill sets that I have, and that's benefiting me quite a bit on the brokerage side now as well. But I was able to find this property. I looked at a ton of property, talked to a ton of sellers, and this was the cream that sort of rose to the top, or at least for the ones that were interested in selling.
Okay. So when you come into a new market, this is one question that people ask me is, when you come into a market and let's say you're looking for, apartment complexes between, 30 units and 60 units, how do you find, you know, every complex that is in between those unit counts? You know what I mean? Like, how do you go out and you just drive the entire city and just look for them, or how do you kind of find those?
So what I did, and what I continually update my list all the time, is I used three different sources to be able to find, because not everywhere has all of the same information. So I used the county assessor, and I was able to run a search just on property type. I am subscribed to CoStar, which gives a ton of information, but there's a lot of missing information. And then I just went and bought a list from Listsource as well. So took those three different sources and sort of pooled all the information and got, I think, a pretty extensive list of all the properties, and even organized them into different groups. So I have the fourplex and under, I have the 4 or 5 to 16plex, and then I have and everything above that. So just organize them into all different groups, and obviously I'm marketing to the different sellers in different ways. And since then, now I've had conversations with a lot of the actual owners, and have a good relationship with a lot of owners, a lot of other brokers, a lot of people that are in the industry. But if you're just jumping in, the easiest way, and all counties kind of run their assessor site, the public information a little bit differently. Some are much more difficult to actually get information out of. But Listsource is one of those easy ones that's relatively cheap to go out and buy a list of property. And there's a lot of information. There's a lot of it that's wrong or outdated as well, but that just comes with the territory. But the biggest thing is almost all of my, other than me specifically marketing for properties directly to the sellers, most of the best deals that I've been a part of come from relationships. So whether that's a broker or even insurance agents, attorneys, property managers that know that I buy property send the information to me because I know that I buy, or that I have other buyers that work with me. So relationships is definitely the biggest part of this entire deal. Obviously, real estate is very much a relationship business.
Yeah, no, definitely. That always comes up every episode is like networking
Yes.
and building your relationships. So so this first deal, 52 unit complex that you got, you found it by going out and marketing to the owner directly, and you realized, you built a rapport with him and he wanted to sell it. Did you build a fund first before that of investors that wanted to invest, and you already had them ready to go, or did you find the property first and then get the investors?
That's a great question. So I've made a lot of mistakes in this business.
Mhm.
I feel like I can educate and give a lot of people a lot of value because of all the mistakes that I've made. And even to my mentor's credit, and they were very adamant, you need to build your list, you need to build your relationships with the money before you find the property. I didn't listen, and I'm very much a deal guy, and so I wanted to find the deal, and the old adage that if you have a good deal, the money will show up, right?
Yeah.
And it did, but no, I did not build my list. I did not build the money side first, and had to jump into that hard once I found the right property. And luckily, it was a good property, and we were able to raise the money and not have too much of an issue there. But I would absolutely recommend, if this is something that you're going to be jumping into, to start having conversations on the money side. Look for potential investors and build that up, and then find the type of property, or at least the type of return that you're able to give for the money that is out there. So
Yeah.
find what the investors are wanting, and then find the right property and the right team to be able to give that to them. And you're probably going to have a much better chance of getting the deal done.
Okay. So you're saying just ask the investors that you're coming to what type of property they want. That, I guess that works as long as they're investors that know about real estate investing. But if you're just taking, people's money that well, they might not know anything about the, you know, multifamily world or whatever. They don't know what they want.
Right. And in that case, it's much more about what are they looking for. So return, security, structure, um, payout, when, timing of payout, how often, what actual return numbers they're looking for. What are their other options? So if they have a $50,000, $100,000 that is sitting in the stock market, and they're interested in diving into real estate or some other options, what are they currently getting, and what are they really looking for? What are their long-term goals? And being able to find it that way. I have several investors that have never invested in real estate outside of what they invested with me, and they probably never will do anything personal because that's just not what they're looking for. That's not their strengths. But I found a product that we thought could deliver the returns that they are looking for in the time frame that they're interested in having it. So
Okay. And the investors that you end up finding, let's say for this deal or for all your deals, I'm sure it's getting easier to find them the more you're in the industry. But for like your first one, how did you find the investors? Was it all just your close sphere of influence, or did you reach out to people on Bigger Pockets because you're pretty active on there? Come to, how did you come to find them?
yeah, so a lot of different ways, and I did partner with another big investor, and he helped. But within the two of us, definitely everything came from mostly from people that we knew. However, there are even some investors that have still never like physically met, been in the same room with either of us, but just based on our reputation and referrals, they trusted us. Obviously, we put out a lot of information, a full business plan, full private placement memorandum. There's a lot of work that goes into this in the beginning. Lots of interviews and webinars, and taking tons of questions, and we really knew the property inside and out. So the money definitely comes from all over the place. Only probably 20% of the money is even here in Iowa. The rest of it is all over the country.
Okay. Yeah, and I'm sure you could do 10 episodes of like how to, I mean, obviously like Joe Fairless, he has a whole podcast series on how to get into a syndication process. So there's tons of it in there. But as far as the deal goes, so you got the investors, you got the down payment and the CapEx fund all ready to go, I'm sure.
Mhm.
Then how did you end up financing the deal? Did you use a big national lender? Was it a local bank, or what kind of loan did you get?
That's a great question. So we started going down the process of doing the FHA 223F loan program, which, if you know what that is, it has
Mhm.
amazing terms. The biggest issue is that it has a very long underwriting period. So 6+ months, typically. We started down that road, and as we're getting pretty far down the road, we realized that it was just going to take too long to be able to close because the seller didn't want to wait another 2-3 months to actually close. So we just went with a regional bank and got just normal bank financing. We got good terms. So it's a good product. And when you get up to those larger properties, that's where the financing gets a lot better than what it does in the smaller area.
Right. What was the purchase price of that property?
Just over 3 million, 3,050,000.
Okay, so your loan amount's probably like 2.4 or something, or 2.1 million,
Yep,
somewhere around there.
220, yeah, 24 or something. Yep.
Okay. And then what would be a good term for somebody to look at? Like, what is a good commercial term? Because some people, if they're just used to residential financing, they're totally different, right? So what would be a good
Yes.
commercial term?
Yeah, so we are just north of 4% interest. We have a 5-year balloon on it, which is pretty typical. Anywhere from 3 to 10-year balloons is very typical for the commercial side. It's extremely rare to go full term. We have a 25-year amortization. We had the option of doing interest only for a year. We chose not to do that because we didn't think it was all that necessary. We wanted to be able to build up a little bit more of the appreciation than or pay off the loan a little bit faster. It didn't make as much sense to do that. And the interest rate jumps up just a tick when you go that route. So overall, it's a really good financing.
Yeah. So what would be the benefit of somebody doing interest only? Is that to do repairs and everything, so you're not having to worry about a big mortgage payment?
Yeah, so one of the biggest benefits of doing that is if you're repositioning the property, so if you are going to be doing renovation, if you're going to have a bunch of turnover, you want going interest only just lowers your payment significantly during that time so that you can cash flow while you're making those big changes and then start to pay off the principal after that interest only works out. And by that time, you should have increased performance enough to make that make sense.
Yeah, no, definitely. Okay, cool. So, for somebody that's looking to get into like the bigger, commercial space of real estate investing, can you touch on the difference between, being an active investor or a passive investor? Why somebody would want to do each one, and then can you could probably get into be a passive investor and learn the ropes with a good syndicator, and then get into your own syndication down the road, right?
Yeah, absolutely. And even a few of the investors that are invested with me have jumped in on the passive side in order just to learn the whole process, learn how we put the deal together, learn how we pay out the returns. What do we do as we're making decisions, as things come up during the ownership process, how we pay out, how we communicate with our investors. And they're learning based off of my work and obviously earning pretty decent returns at the same time. So I absolutely recommend going that route if that's something that makes sense. The whole decision between active and passive is one that I work with people all the time, and I love this idea. So Robert and Russ, real estate guys, also talk quite a bit about building your personal investment philosophy, and that's really just defining who you are as a person, who you are as an investor, what do you want real estate to do for you, and taking all aspects of this, all of your resources, your time, talent, cash, credit, experience, and being able to define who you are and how you're going to go about this and build the strategy long term. And part of that is one of the big items is that passive versus active, and at what point, short term and long term, how much time right now do you have available to be active in this? If you have a full-time job and 4 kids and parents that you're taking care of and a lot of other stuff that you're doing, you probably don't have a lot of time to be very active, but you can start down that road. I have a lot of people that are working those full-time jobs, but they're starting in real estate and they eventually want to have the real estate take over the income that they're earning at the job and dive into real estate. And that's awesome if that works for you. A lot of people say that just because they hear it on Bigger Pockets, they hear it on a podcast and be like, yes, I want to go full-time in real estate. And I always try to get them to slow down. It's like, why? Why do you want to go full-time in real estate? Why do you want this? And everybody touts the freedom, the flexibility, and there is a lot of that. There's also a lot of responsibility. So for me, one of the biggest issues that I had lately is that we hired a property manager that turned out to be not sufficient.
Less than ideal.
Less than ideal. I will put it out there extremely in the nicest words that I can, to where we had to take over multiple properties at once, and take over properties that a lot of things that were in bad situations. So bad tenants that are in the property that we had to get rid of, renovations that were in the middle of being done and they're being done horribly to where we have to start over. A lot of stuff that was said that was done that's not done, and dive in. I could have looked at this as, I want to be this passive investor and hire this property manager and then never have to worry about it again. And you always have to do a certain level of work just on oversight and keeping everybody accountable. But when things come up, sometimes I have to be the one to grab my hammer and go swinging myself. Not ideal, but it just is what it is. So there again, developing this personal investment philosophy is when the bad stuff happens, when you hit these roadblocks, then what do you do? And is that still, because the roadblocks are going to come, so when they come and you have to dive in and put in this extra work, is that still part of the whole plan? And is it still going to move the needle and not make you want to just throw in the towel and completely give up? Because it's going to happen.
Right. Yeah, definitely. And I think a lot of people, they get caught up in their regular day-to-day job and they've been there for a long time and they think, oh, this is horrible. It'd be so nice if I was just having, this full-time real estate career. But then, like you said, when the shit hits the fan, you know what I mean? Pardon my expression, but there's still hard work and stressful situations and stuff you're not going to like. Like even like, I'm sure the happiest people in the world, they still have horrible days, multiple times a year. So you got to learn to deal with it. So passive investing could be a great way. Now, I'm sure not all syndicators will take the approach of walking somebody kind of through their process, will they? Or is that just something kind of you do or certain people do if somebody invests with you?
Yeah, I would say that potentially the majority aren't going to walk down that road with you. It's something that I do, but it's something that I've done for years. So I've had a real estate meetup that I've run for 4 years or so. And I love that process. I love the development. I love strategizing with people. And I do it a ton on the brokerage side as well. I get so many emails and calls and be like, hey, I want to jump into real estate. Can we go look at properties? Like, yes, we can, but let's take a step back real quick. Let's talk. And I've never heard anybody say, we're spending too much time on this. As we dive in, they typically enjoy the process. It's not always an enjoyable process because you're really taking a deep dive and looking and answering a lot of those hard questions. But I've never had anybody say, yeah, this is a waste of time. I don't want to do that. I just want to go out and buy property. Asking the right questions, as difficult as they can be, is so extremely important, especially when you're throwing so much of your time, your money, your investment, your credit, your family's time into this. It definitely requires you taking a look and taking some time to develop these beforehand.
Yeah, no, definitely. I definitely agree. And what is it that somebody, if they're looking to get into syndication, be passive investor, like there's so many people out there. So what is a couple things that somebody can look for to know they're getting in with a legitimate, operator? The company, is a good one to be with.
Yeah, that's a great question. So the easiest answer is track record. Somebody who's done it, who's been in for a while, done different types of properties, and somebody who has a good reputation. That's obviously going to be always be that's always going to be the biggest piece of it. Somebody who really knows that specific market and that specific product type in that location. There's obviously a lot of differences. Even here in Des Moines, I'm sitting in Urbandale, and 2 miles away in Beaverdale, it's a totally different market type, totally different tenant base. So somebody who really, really knows their product, and they don't necessarily need to know it personally. So my partner lives in Hawaii, has no idea what's going on in Des Moines, but he has somebody, me, who's here who really, really knows the market. And I know a lot of the syndicators do it that way. They syndicate property all over the country, and they have really, really good operators, managers who are into that property. So and there again, bet on the jockey, not the horse. So it's all about the operator and the team that they have together. So not just them. So me by myself, I'm not always the best jockey if it's only me partnering with somebody else who knows a different side of it, we can work together. When I'm on vacation, is everything still going to be run properly? Is there someone to take over?
Right. Yeah, definitely. So where are you guys at now? How many units do you guys have? And then where are you guys headed in the future? Are you going to continue to buy bigger properties and stick in the Des Moines area? Or are you going to kind of branch out into other parts of the country?
Yeah, so immediately, my focus isn't even on doing a lot of syndication in the next year. My focus is I'm in a big transition at the moment. So like we talked about, I have a lot of property all over Iowa, and I'm working on focusing everything into the Des Moines area. So I have great cash flowing properties, but because I'm so spread out, that by itself is taking up so much of my time that really should be spent more focused on different types. So that's why I'm not going to be starting a new syndication probably at least in the next year, because I'm focused on restructuring myself. I'm doing the work constantly on my side, developing my personal investment philosophy, and that's telling me that I need to completely focus. But down the road, yes, we're going to be buying. Part of it's also the market cycle that we're in, because everything's so hot right now that it makes sense that I refocus versus go out and buy a bunch of property just because it's what everybody's doing.
Right. So you're selling off all your properties and you're refocusing in the Des Moines area. That means are you taking those properties and then, putting that money back into properties that you own yourself, that you're not syndicating, that you're just buying bigger properties, or how are you kind of refocusing that?
Yeah, so I'll be doing both. So I always throw money into the syndications that I do, equal to about what everybody else is throwing in. So some of that money is going to be allotted to the syndications if I do in the future, that are going to be going towards that. But yes, most of the capital as I sell off other properties is going to be stuck into larger properties here in the Des Moines area.
Okay. Cool. So I'm trying to ask this question more often, since you had mentioned the market cycle and where we're at. What do you think about the market cycle? It's different everywhere, but what's kind of your feel of how everything's going?
Yeah, so we're in a very interesting time. So we hear a lot of people saying that yes, we're due for the crash by the end of the year, or we're due for a crash, within the next 3 years. A lot of people are all over the place, and I really don't have a very strong opinion on what I think it's going to happen. I don't think we're going to have a significant correction through 2020. I think it's going to take longer than that, maybe towards the end of next year. Um, we still have a lot of great fundamentals. One of the things that I love about Des Moines is it's kind of the catch-22, the double-edged sword. I'm excited for the correction because prices are going to get lower, and I'm putting myself in a position where I'm able to take advantage of that. But it's also difficult. A lot of people ask me, should I wait? Should I hold off on buying anything until the crash happens? Because when the crash happens, then I can buy property cheaper. Yes, but it's very, very difficult to get financing during the crash. So if you have a whole bunch of cash saved up, then yes, you're going to be able to get some great deals. If you're going to need to rely on banks, you may be completely sidelined on that side and not be able to get any debt until the uptick starts to happen. So you may be completely put out from the market at all. So I never say that it's good to completely hold off. And what I tell a lot of people is that it's always a good time, no matter what the market cycle is, it's always a good time to buy property that fits your investment philosophy, that's in the right area, that has the right team put together. It's never a great time to buy property just because it's cheap.
Right. The numbers have to make sense. You know what I mean? Like no matter what, you got to like plan for it. And if it's cash flows now, plan for the worst. And as long as your numbers still make sense, right? It doesn't really matter what the overall market's doing.
Yeah. Yeah. And if you hold off and you don't want to buy until the crash, well, people have been talking about the crash for the last 3 years.
Yeah, at least.
You could be holding off for quite a while, and you're missing out on a lot of the opportunity that happens in that time.
Yeah. Okay. So you mentioned you're a broker too. Do you work for a brokerage company there, or do you kind of have your own brokerage company and you just do commercial stuff?
Yeah. So I work with Remax Commercial here in Des Moines, and I almost specifically work for any type of investment property, mostly on the residential side. Residential meaning single family rental property up to whatever 200 unit apartment complex. So I don't do a lot on retail, industrial, anything like that. But I deal almost exclusively in the multifamily world. Help a lot of first-time investors just get started. I have a lot of larger out-of-state buyers that are looking for 50, 60, 100 unit properties. So anything inside the multifamily, the residential world is where I sit.
Okay. And one more question before we move on to the next little part is, a lot of people have problems getting brokers to kind of take them seriously in this market, right? Because everybody has their buyers list. All these commercial brokers, they have their list of buyers, and people are buying up. Money's out there, free flowing everywhere, and people are fat and happy. And a new person comes into a market, especially from the coast. It's like, how do you get the brokers to kind of take you seriously and actually send you deals that aren't the ones that are just out there dying and way overpriced?
Yes. So it's definitely, as much as I dislike it, it's very much the good old boys club. And yes, all the brokers have like a few buyers that are in their pocket. They feel like they control everything. A lot of arrogant people in this business. I try not to be super arrogant. I don't think I come off that way.
No, definitely not.
And I had that issue when I moved to Des Moines. Even though I lived a couple hours away, really didn't know a whole lot. I've been to Des Moines a couple dozen times over the years, but didn't know anybody in the area. And I started meeting, like I said, I had about 70 or so units at the time. I had a decent amount of capital sitting in the bank ready to buy, and I had already started down the road of syndication, or at least developing that. And I know the business. I can talk it really, really well, but I would meet with a lot of these bigger brokers and just completely get the cold shoulder, get ignored, be required even to really have much of a conversation to sign an exclusive buying or agency agreement, saying that anything that I would buy, they get commission on, which is just, it's dumb. It's very hard to get good brokers to talk to you. Well, that's not true. The actual good brokers are very easy to talk to and get to know, is the ones that are sort of established and feel like they control the entire market. And a lot of those, I believe, are going to be fairly phased out as we make the correction and the market changes. The people that are less willing to help educate, help you walk through the process, are sort of going to get phased out from the people who are really willing to give in and educate and help you through the whole process, especially working with new buyers.
Mm-hmm. So I guess it's just like being as a buyer coming to find an agent, you just have to really like be persistent, follow up a lot, make sure you have money ready to go. Any other tips for talking to brokers in a new area?
Well, it really depends on, there again, knowing where you are as an investor also kind of determines on the type of broker that you're going to work with. So if you need some hand holding, some education, a little bit more than just being sent a deal and letting you fend for yourself, then look for that type of broker. If you can do all of your underwriting, you don't need the assistance of anything from the broker, then you're fine working with those guys that's all they do. So know the team, or know who you need on your team. Don't rely on somebody just because they may or may not have this name behind them that who knows if it actually means anything.
Right. So I guess it's just like really comes back to networking, talking to a lot of people, just call a bunch of brokers, be honest, like get to know them, and the good ones will kind of like float to the top, just like everything. And then the bad ones will just never return your call and you won't ever hear from them again, I guess.
Yeah, absolutely.
Okay, cool. Well, yeah, that's a ton of good information. It's a great story. I'm excited for where you're going. What is your favorite resource of where you like to learn about new things, whether it's syndication or new real estate strategies? Is it podcasts, books, seminars, mentorships? What's the number one thing that you like?
Yeah, so all of the above. I'm fairly agnostic about where I get my information. I kind of look in a lot of different areas. Bigger Pockets obviously is one of those that has just a tremendous amount of resources and recommendations. Um, Sometimes it's too much information. You can get bogged down on just way too much resources. There's several good podcasts that I listen to consistently. I'm huge on podcasts and audiobooks. I can't even tell you how many books are in my Audible library. Not that that means anything other than I buy a lot of books and read through them fairly quickly. But anything specifically, yeah, it's hard to tell without knowing. I make a lot of recommendations to specific people just based on exactly what they need and they're looking for. But yeah, just be all over the place, be in the market. Set up, even I learned this a while ago, but setting up Google alerts for articles about real estate happenings, information, news that's going on in the area that you're interested in investing in. I get articles constantly from different areas, different sources. Even the New York Times every once in a while has an article that mentions Des Moines in it, and I'm on top of that as soon as it gets published. So just being all over the place, find out the source of information that you need that actually gives you value. Not everything's going to actually provide you value.
Yeah. Okay, cool. What about a favorite app or a program that you use in your business that makes life a lot easier?
CoStar for anything on the commercial side is amazing. There's so much information. It's expensive, so it's not for the typical investor. But yeah, other than that, I mean, Bigger Pockets, I'm on that app constantly, just because there's so many good people on there.
Yeah. Okay. And then what's a good influencer that you follow or mentorship program? I know you mentioned the real estate radio guys. Is there others that you would recommend? Do you have your own mentorship program?
I Real estate meetups is probably the other side of that. So I run one here in Des Moines.
Hmm.
I do have a small group of people that I mentor and help throughout the process on a much larger scale um, than I do. It's much more intense than what I do for normally for my clients or my investors. Um, I don't talk about that too much, um, but yeah, the real estate guys are ones that I've been following for years. There's lots of other uh, great ones, probably too many that I could list at the moment.
Yeah, no,
um,
definitely.
but if anybody wants, I mean, some of the stuff that I've been a part of for a while, I've been watching. Definitely get a hold of me, and we can talk, and maybe I can point you in the right direction. But yeah, there's so many resources out right now. It's tremendous.
Okay. So with that, where can people find out more about you, your businesses, and if they want to look in the Des Moines area, where can they contact you?
Yeah, so find me on any of the social media. Almost everything is just at Chase Keller. Um, Email is chase at bestdmr.com, best Des Moines Realtor.com. Um, Go to my website. There's not a ton on my website at the moment. We're in the middle of redeveloping that, um, but yeah, get a hold of me. Find my cell phone and shoot me a call, text. I'm pretty open, pretty easy to get a hold of.
Cool. Right on. Well, that's a lot of good information. Hopefully somebody reaches out to you and can learn something from this. And Chase, I appreciate you being here. Look forward to seeing what you do in the future. And yeah, thanks, buddy. You have a good afternoon.
Yeah, you too. Thanks. This is a lot of fun. I appreciate it.
All right, man. Have a good day.
You too.